I'm here to definitively tell you that merchant cash advances are horrible for construction businesses. Horrible. Many others too, but absolutely horrible for construction businesses. I'm going to tell you a story about a contractor in Texas. 40 plus years in business, a guy 65 to 70 years old, years away from his retirement, been in the same town, working with the same general contractors, the same project managers, developed a great business. It was growing from $3, $4, $5 million up to $10 million. Exactly what he had planned. He had grown his business from several dozen employees to over 100. He was doing projects that were a few hundred thousand up to a couple million. And then one week, one of those projects had a little bit of a delay. Nothing problematic, nothing different than you'd see in a normal construction world. And it was going to be tight for payroll. And what did he do? Let me tell you what a cash advance is. A cash advance is not a loan. It's an advance on future sales. If you are a business that does, make easy math, $2.4 million a year, you could extrapolate out, this business is going to do $200,000 a month in sales. And so if someone wants to buy those future sales or receivables, they could give you money today and then take those future sales when they come in. That's essentially what a merchant cash advance does. Let me tell you how it works. Basic requirements of an MCA are submit an application that includes your personal credit, personal social security, your business name, your business address, and some other basic information. Along with it, you're going to submit 4 months worth of bank statements. They get those bank statements, they can get an idea of how much your deposits are, what your average deposits over a certain period of time, typically 3, 4, 5, 6 months. And then what they can do is build a little model that says, you know what, if you have an average amount of deposits of $200,000 in a given month, well, then we can likely give you $200,000 now and build out a repayment schedule for that $200,000 that might be over the course of 6 or 12 months. You sign essentially a merchant cash advance receivable type agreement. I say agreement because it's not a loan. And essentially with the amount of money they're going to give you is some form of the amount of the average deposits that go into your account on a monthly basis. They're then going to add a factor rate to that. The factor rate is essentially a markup of the number. So in easy math, if someone's going to give you $100,000 and the factor rate is 40, you're going to repay them $140,000 over some period of time. And if it's a 6-month or 8-month period of time, we're going to take the $140,000 and divide it by the number of business days in that period of time. And that is now the daily number that you have to pay. So it's important to realize that. And that factor rate isn't an interest rate. It's a fixed fee or margin that you need to pay back. The issue is they're very, very expensive in that term type structure. And again, remember, we're buying future receivables. So when you buy those receivables, it's not a term loan where you gotta pay them back as you earn it. And if you don't have enough revenue to accommodate the dollars that they're giving you today, it can be real problematic when those loans need to be repaid on a daily basis and they're being debited out of your account. Now, whether it's daily or weekly, either one, if that repayment structure does not match up with how you earn your revenue, you are going to have a problem. Let me repeat that. If your revenue doesn't come in at the same pace in which you are repaying the merchant cash advance, you will absolutely have a problem. If you sell your future receivables at a higher factor rate or at a higher dollar number than you actually make in margin on your sales, you are going to have an even bigger problem. Let me tell you what I mean by that. If someone gives you $100,000 and you have to pay them back $140,000 in a 6 or 8 or 12 month period, and when you create $100,000 of revenue, you only make 20% margin, well, you need to get $200,000 in order to generate enough margin, $40,000, to pay back your $100,000 loan. And if you're someone who pays your debts, which we all are, hopefully, then you're going to be more apt to pay this daily loan than you will maybe a material supplier or maybe another vendor that you have to own money. You're going to maybe pay them a little less or extend the terms with them and pay this daily or weekly debit that's going to come out of your account automatically. So who's actually selling these merchant cash advance loans? Well, if you look up online, you'll probably find hundreds, if not thousands, of different websites. And in reality, there's only probably a dozen, maybe even less, actual lenders, merchant cash advance lenders. Who's selling these loans are brokers or independent agents that are calling and they have affiliations or relationships with these merchant cash advance lenders. And there's nothing wrong with that. Matter of fact, we work with many different brokers or referral sources that may work with clients and they're finding the right solution for their client. But a lot of them out there are just selling merchant cash advance loans. And that's the people that you need to be a little leery of, because a merchant cash advance loan isn't for everyone. Just like our company's called Mobilization Funding, and this video isn't about what we do, but our loan program is not for everyone. This is the reason why we know about merchant cash advance loans or factoring companies or purchase order financing, because we want to make sure we can send people to the right source that's good for them if we're not it for them. The reason I tell you about this broker network is because the broker network is responsible for the ultimate cost of the loan. Because if you get approved by the lender might approve you for a factor rate of 20%. The broker then has the option or the ability to mark that factor rate up 5, 10, 12, 20, depends on the percentage points. And that's how much they're going to make on that. So if a typical $100,000 loan has a 20% factor rate from the actual lender, and most of the brokers are not the actual lenders, despite what they might tell you or say, or the fact that the application has their company name on it. That does not mean they are the source of capital. They will then mark that loan up that was 20% from the actual lender itself. They might mark it up 10 or 15%. And now your cost is a 30% factor rate or a 35% factor rate. And yeah, that means they're going to make 10 or 15% of that $100,000 merchant cash advance to you. Is there anything wrong with that? No, nothing's wrong with that if that's what you want and that's what you want to do. But it's not a good loan for construction because the lenders themselves don't understand construction. They don't understand that if you look at the deposits going in your account, those deposits are not all revenue for that subcontractor. There's material suppliers to be paid out of that. There's other vendors, there's equipment vendors. I'm talking about real costs that are paid to the subcontractor that are owed to the material supplier. Now, any business has accounts payable. However, construction businesses have a little bit of different accounts payable. When they're working on a project on a job site, those material vendors and those suppliers, they have lien rights against that project, which means there's requirements in those contracts that when that subcontractor's paid, they've got to be paid. And if they're not paid, they can lien those projects and jobs and cause major problems. A non-construction business that has accounts payable and they might owe a vendor, that vendor can't go call their end user customer in a e-commerce business and tell me or you or some individual they got to give our sneakers back. They have recourse against the business, but they don't have recourse against the business's customer like in construction. Let me tell you what's good about an MCA. One, you can get it real fast, like the same day or maybe even the next day. It's a quick evaluation. It's minimal documentation. It's deposited right in your account. You don't have to tell anybody. There's no other special requirements. Maybe you don't need to tell your customer. It's easy. It's just easy. And very few things in life are easy, particularly getting money, especially if you've dealt with banks or others. There's long documentation and it's exhausting and it's miserable. And I agree with you. However, easy might be easy today, but it can be equally as horrible and terrible tomorrow or later. When you do apply for a merchant cash advance, because your personal credit is a big requirement for the merchant cash advance lender, when you connect with that broker and they shop your application around to the lenders to get the best possible rate for you, or maybe even for them, they're going to take your application and they're going to pull your credit dozens of times potentially. And those pulls off of your credit are going to cost you 50 to 100 or more points of your personal credit score. And that's going to hurt. And if you have other bank lines or other forms of debt that are requirements to keep your credit at a certain rate without defaulting on your loan, that's something you absolutely need to think about. So back to our subcontractor in Texas. He needed money to make payroll, right? Well, he picked up the phone one day, answered one of those calls. He then was offered several $100,000. I mean, this is a $4 or $5 million business. He's got multiple hundreds of thousands of dollars going through his account. He's 65, 70 years old with great credit. He has a great business loan with his bank and relationship, and it was easy to give him money. Matter of fact, I think he got a couple $100,000 merchant cash advance loan. He said, "No, my payroll's only 60 or 70,000, but it'd always be good to have a little extra money." It was easy, it was simple, he had a problem, and he took it. He started to repay that every day, and the first month wasn't a big problem. Second month wasn't either. And all of a sudden, that amount of cash flow coming out of his account over that 2-month period really strained his cash, because contractors get paid once a month. And if they get paid once a month, they're paid that month for what they did and the cost they incurred 45 or 60 days ago. So it's not even in line with the volume and the payroll. They're already floating payroll for 6-8 weeks. They're already floating material suppliers 6-8 weeks. So when they get cash in their account, they've got to pay these suppliers and have enough money left to float their payroll for the rest. If you earn your money out of sequence with the repayment structure of an MCA, you will absolutely have cash flow problems that are going to cause you more and more stress than just missing payroll one week or having to have a tough conversation with a material supplier or an employee or whatever. As bad as that is, it's not as bad as what happens next. 2.5 months later, here's the problems he had. He had the same payroll problems. He now had 2 months worth of accounts payable that he didn't pay. Material suppliers were shutting him off on the jobs. They were not going to, without payment, they weren't going to deliver. Now he's got general contractors, project managers calling him, wondering where it is, schedule delays. They're holding back invoices that he put in for these previous months because they won't pay him. They're going to set them off. All kinds of threats. What else is happening? Those merchant cash advances are calling him too. But this time, they're not calling him and asking for more money. They're calling him because their debits each day are starting to bounce. And they're getting frustrated. And they're making threats. And now this poor gentleman is in a world of hurt. And instead of just missing payroll, his whole business is now at risk. Is it his fault? Yeah, of course it's his fault. But the problem is no one was there to really help him or educate him either. They led him down a path without giving him all the information. And whether he wasn't educated to it or whether they knew and didn't care, it doesn't matter. The problem is now solely his, or it'll be solely yours if you make this mistake. I intended to send this video out to educate people and understand what merchant cash advance is. But I gotta tell you, again, unequivocally, merchant cash advance loans are not for construction companies. They're not. They don't work. They're going to cause problems. If you've taken them out already and gotten away with one, good for you. And I'm sure you know exactly what I'm talking about. Maybe not to this degree. Maybe you only got one. Maybe you got one that was appropriately sized and not too big. That's all good. And I'm glad. But what I'm telling you is if you don't know, these are the things that you need to know prior to making that first leap. Because that first leap isn't always just one leap. It could be a really deep dive, and you got to know what's on the bottom, and you need to make sure you're educated and get some good advice. And if you're working with people that have your best interests at heart and they're asking you good questions and they're making it tough on the front end, or it feels tough on the front end about getting the loan or getting the money, ask yourself if they have your best interests at heart and they want just good information to help assess your business so they can appropriately give you something that you can use. And if the answer to that question is yes, but it comes with a little frustration, deal with it, because in the long run, you're going to be better off. And so assess the people you're talking to about lending money. If they're giving you, if it feels hard, you're probably going in the right direction. If it's too easy, great. But be cautious that too easy sometimes comes with a different host of problems. They just show up a few days, few weeks, or maybe even a few months down the road. And I can assure you, the easy road, when those problems do show up, they're going to be big problems, not little problems. So I hope this video helped you, and good luck.